Okay, so let's talk about the hospitality sector. And with room rates growing at the fastest pace in a decade, it really draws in a lot of attention. It actually also reminds me of why Lemon Tree Hotels, which pretty much delivers at every checkpoint of the value chain, did so well in their first day of listing. So, touching base with Arif Patel, who's the Vice President Sales, Marketing, Distribution and Loyalty at AccorHotels. He joins us with a quick assessment of how things are shaping up in the hospitality sector. And we are also joined by another special guest. In moments, he'll be joining us to talk about. Okay, we also have the chairman of Royal Orchids who will be joining us in just moments. But how are you really viewing this entire scenario at this juncture, given the fact that there is so much attraction, Arif, for the hospitality space and for services at every point of the value chain? Do you feel on the ground the momentum picking up and that being so strong?
Absolutely. If you look at the big data trends, right, you spoke about domestic aviation growth, e-visa. We can feel it on the ground. Obviously, the occupancy, as you mentioned, has reached the highest level in last 10 years. When you talk about 68% occupancy, that includes hotels which are ramping up. If you look at the stabilized hotels' performance during last calendar year and how it started in first quarter, all of them are trending about 70%. You spoke about city of Mumbai. There is no real supply coming up this year. So supply growth over next 4 years up to 2022 is going to be quite muted. So the hotels which are open are ramping up very fast. They are stabilizing, and that's definitely going to put pressure on average rate increase. And we can feel that on the ground. So almost 70 to 80% of our revenue per available growth is coming from average rate and not from the occupancy.
Mr. Baljee, throw some numbers, in here, because we understand that occupancy rates have risen to about 65 to 66 odd percent from the earlier low of 55 to 58 thereabouts. Are you seeing a rise in occupancies, and if so, if you could just quantify that?
Yes, definitely. If you look at the growth in a travel search, as you know, the travel remains the number 2 online buying platform after retail. It's almost 75%, and retail is at 89%. If I just look at the first quarter, as you know, India will go into the main holiday season starting April because of the school vacations. There's a 53% growth in a search, travel related search on Google, right? If you look at the last summer, there was a 40% growth in a gross booking. So there's increase in staycations, right? When you look at long weekends, you don't find rooms in an offbeat location. What's happening is people are spending time in a city where they're living. So we have seen almost 15 to 20% growth in a staycations. The large family travel has tremendously increased. There's a growth of 15%. When I say large travel, family travel means almost 15 to 20 people traveling together, both domestically and internationally. Europe is bouncing back after 2 years of low. We've seen increase in demand in Paris and in France. UK remains number 1 travel destination. Other locations like Dubai, Mauritius, these are the popular destinations during summer vacations.
Mr. Baljee, what is your sense? Do you think there is a significant uptick in both leisure and business travel, or large part of growth is still coming from business travel and that is adding up to occupancy rates?
Now, what's happened is the last 2 years, there's been a significant growth in the leisure travel because of the number of long weekends that we have in our country. And, and what is happening is that it's easy to travel nowadays. You just pick up your smartphone and you make a booking for the hotel and your flight, and you are just there. So I think that has really been a big upside for the last at least 2 or 3 years. The occupancies in the leisure destinations have really zoomed, and they are today double income, no kids. There are so many of these people. Particularly, I find that in Bangalore, there's a large number of youngsters who just at a drop of a hat just plan a holiday last minute and go off. So that has been a big boost, and we've got today a big good mix of leisure properties and business properties. And our occupancies last year have gone up by 7% from 68% to 75%. So in the coming year, we don't see much of improvement in the occupancy, but last year the ARS went up by 3%. But this year we're expecting that the ARS will go up by about 10%. So I think just like last year, there was a tremendous growth in the room sale. And as you know, most of the room sales go down to the bottom line. About 80% of that goes to the bottom line. So there'll be a huge improvement in the bottom line. And we hope to see the similar growth in the coming year. This year we are expecting, I think by next month, we're expecting to cross 50 hotels. And this financial year, we should cross about 65 hotels. That means we'll add another 15 hotels. Last year, we've added about 10 hotels. So I think the space is really growing. We are very well placed because we are in Bangalore, which is the fastest growing city, largest absorption of office space in Bangalore, plus the airport has crossed all expectations, is coming to the second phase of expansion, and we have 6 hotels in Bangalore. So we are very well placed, spread throughout the city, starting from the airport to Whitefield. We got 6 hotels, so I think we are very well placed.
Indeed you are. But Arif, would you concur with Mr. Baljee? Because in terms of numbers, a lot of these luxury hotels, the high-end ones, have taken quite a hit on their bottom line. With now an increase coming in on foreign tourist arrivals, the overall occupancy numbers increasing, and airline passenger traffic as well, would you say that the sector is now poised for a turnaround when it comes to numbers and profitability too?
Absolutely. As Mr. Baljee said, right, 80% of revenue flows through the bottom line. We operate 48 hotels and almost 9,000 rooms. We'll be having 80 hotels by 2020. We are talking about bringing Raffles and Banyan Tree in India. We are having active discussions. So definitely hospitality sector will bounce back. It's on a right path. And next 4 years are going to be extremely good for the industry.
Okay. Mr. Baljee, one side is the leisure travel. Now, when you say leisure travel, long weekends, but you get 3-4 long weekends in a year. What happens to those destinations when there are no long weekends and on weekdays?
Yeah, you'll be surprised. 2 days is always coupled with one. Suppose Monday is a working day, Tuesday is a holiday. So people take that one day off, and you'll be surprised that almost they are about 50 long weekends. At least you get 50 long weekends in a year, and that is fantastic. The other thing I wanted to add about profitability was that debt is normally driven hotels down, and debt rates, like we were paying about 16%. Now our debt is down to 10% per annum, and now banks are chasing us. Now other way round, when we were chasing the banks. So our debt has come down from 350 crores, it was in those days about 3 or 4 years back, to about 75 crores now. So we are very well now poised for good profitability, because we are now going through an asset strategy for expansion. So we're not planning to take up any additional debt for the time being. So I think, the worst is over. This was a very long down cycle from 2008 onwards. But of course, last 2 years, things have improved. And I think now, as the industry pundits have pointed out, that the next 5 years going to see a real boom. And particularly, I see maybe in the super luxury space, like in Bangalore, I'm seeing a lot of capacity coming up. But in our segment, I don't think there's much of capacity coming up. So I think we are really poised for a great future in the next 2 or 3 years.
Okay.
Yeah, I just want to understand that. Do you think that in a manner of speaking, Mr. Baljee, with the changing trend, we will also see for hotels such as yourself that return ratios and profitability start to improve? I know you've answered that question in part, but I also want to know what this means for investors in your business. So it's looking great. Revenues are picking up, room rates are going up, occupancy levels are higher, top line seems to be sorted. On debt repayment, the midpoint of the profitability, which is margins and operating profits at the bottom, how do you foresee going forward the returns?
See, I feel that there is a great because whatever the euphoria was there in the 2003 or 2005 onwards, that has died down, and today people are not announcing 100 hotels or 200 hotels. So all those people whose core business was not hotel business are out of the hotel business. So now they're only serious players in the hotel business, like us. Our core business is hotels, and this is the only business that we have. And I think that, because there is going to be a more demand than supply, so there's going to be a mismatch in the next 2 or 3 years. As already we are seeing the occupancies are looking up. In some of our hotels, we are clocking occupancies of over 90%. So I think, there's no other way except rates to go up. Like Goa and Pune, I've seen huge improvement in the occupancies and ARRs now. So I think, whatever next year we are going to get in terms of the top line, major will flow into the bottom line, and then there'll be a huge upside on the EBITDA levels. Our share price have moved up significantly. That means it's a reflection of the earning capacity of the company. And I think going forward, it's going to be definitely much better than this year. Last year also is going to be much better this year. That's what I foresee.
Right. Arif, thanks very much for putting things in perspective for the benefit of our viewers. There couldn't be a better time to plan a holiday or go out there and book yourself in any nearby hotel, because
any long weekend coming up.
It's quite attractive.
Please don't apply for holidays.
We are urging viewers to go have a holiday. We are saying nothing.